Hey everybody, welcome to Mortgage Market in Review for the day of Tuesday, June 27th, 2023. And oh, what a day it was. Bonds came into domestic session with modestly stronger territory. After an uneventful night of narrow sideways trading, they're logically selling off early following much stronger durable goods reading. It isn't exactly a top-tier market mover, but a fairly resounding beat. MBS were down 8 basis points early as a result. Stocks were up 13 points because people were just keep on buying stuff. No matter what, people just keep buying stuff. Durable goods orders came in at 1.7 on a -1 forecast, so a giant beat. It was 1.1 previously. Durables non-defense, excluding aircrafts, came in at 0.7 on a 0 forecast. So that means people are just keep buying stuff for their household goods. New home sales came in at 763,000 on a 675,000 forecast. So 683 previously. Wonder if there's going to be a downward revision at some point, but that's pretty heavy. We also got consumer confidence came in at 109.7 on a 104 forecast on a 102.5 previous. All of this stuff adds up to no matter what we say, no matter what happens with rates, no matter what happens going on, people are only happy when they're buying new shit, and they're just going to keep on buying new shit because it's the only thing that makes them happy. Separately, the Case-Shiller Home Price Index reported an annual decrease of 0.2 in April. We did see some big declines in certain MSAs like Seattle, which was down 12%, San Francisco, which was down 11%, Vegas down 6%, San Diego down 5.6%, so it's still only just ridiculously expensive, and down 6.1% in Phoenix. The median new home price fell 7.6% on a year-over-year basis, but that is the median price, so that's a very skewed statistic. The average sales price fell 6.6% to $387,000. This isn't really a fair representation because there's no houses for sale in the lower markets. It looks like the affordability issue has caused builders to focus on more lower-priced properties and luxury homes, which is good for everybody, I think. Consumer confidence improved in June. The present situation index, how things actually are now, is at 155, while the expectations index is at 79. Inflationary expectations fell to 6%. However, that's quite a bit higher than the Fed really wants to see. European Central Bank announced today they plan to hike rates in July. They're also going to keep rates higher longer. The U.S. has had to issue a lot of short-term treasuries as a result of the debt ceiling increase, which posed a whole slew of challenges to the bond market. Fortunately, so far, the absorption of this new debt has been going pretty well. So forget love today. Data hurts. Durable goods orders fired a warning shot at 8:30. Consumer confidence and new home sales finished the job at 10. With that, a modestly stronger start gave way to logical sell-off of moderate proportions. By 7:30, the losses had run their course and bonds drifted sideways the rest of the day, perfectly inside the prevailing range. MBS ended at 17 basis points down. Stocks won a whopping 50 points. So at the 99.87, we are holding right around that range. So we tested and went above that Fibonacci line at 99.845 at the end of the day. However, it's right in that range between the 50-day moving average, the 25-day moving average, and the Fibonacci line. We have two ceilings on the top and a lot of room to run on the bottom. In terms of things you can control that will improve your life and improve your pocketbook, check out our sponsor at wellthatmakessense.com. This is about finding motivation in difficulty. When basically Alex Hormozi talks about when I got to a low point where I think, why do I even bother? I just remind myself that this is where most people start. This is why they don't win. Building a business is hard. Hard feels shitty. This is just what hard feels like. It's a message we all gotta face in this market right now, is having a job that pays hundreds of thousands of dollars a year every year is hard. This is the hard part. This is what hard looks like.